of the biggest gems that you can obtain from the IRS are your personal tax transcripts. They're called account transcripts. And guess what? You don't even have to call the IRS. You can go online and order your transcripts. It's really easy at irs.gov. And I tell you, knowing what's on your transcripts can put you in the driver's seat with the IRS when negotiating with them. So I'm going to give you 5 things that you can pull from your transcripts to help you better negotiate with the IRS. Let's get right on into it. So number 1, whether or not you're in filing compliance. Now guys, a lot of people don't know this, but to be in filing compliance, the IRS, they're only looking for the last 6 years worth of tax returns. So right now, we're in 2024, so they're only looking for 2018 through 2023 tax returns to be on file. I can't tell you how many times I've seen people file old years and create unnecessary tax debts for themselves. So you want to find out whether or not you're considered in filing compliance, remembering that filing compliance is just filing the last 6 years worth of tax returns. Number 2, your transcripts will tell you when you filed your tax returns and how much you owe. It'll even give you a breakdown of the taxes versus penalties versus interest and what type of penalties you actually owe. Number 3, your transcripts will show you if a return has been filed for you by the IRS. Now I can tell you, it's never a good deal when the IRS files a return for you. They call these substitutes for returns. Never a good thing because they do not give you the credits or the deductions that you are legitimately entitled to take. So most times you're paying more tax than what you should. But there is some good news here. You can file your original return, and once you do that, it will replace that substitute for return that the IRS filed for you. So go ahead and get in those original returns. Number 4, the tax transcript will tell you if liens have been filed. These are tax liens. Now, when the IRS files a tax lien on you, they file it on you and all of your assets that you currently own or that you may own in the future. Tax liens do not give the IRS the right to take an asset from you. They cannot do it. The only thing that they can do is if you decide to sell a particular asset and if you have net proceeds from that asset, then the IRS can require you to give them some of those proceeds. But there are things that you may be able to do to get those liens released or discharged. So it's good to know what's on there. And by the way, liens apply year by year by year. There may be some years where liens are present and others where liens are not. Number 5, your transcript can tell you whether or not the IRS can actually garnish your wages or levy your bank account. Now, the IRS, they can't just willy-nilly go and garnish your wages or, take money out of your bank account. They have to give you notice. And I promise you, they give you ample time, ample notice. But in order for them to act and to forcibly act to take money from you, they have to issue what's known as a final notice of intent to levy. They can't do anything without that final notice of intent to levy. And you can recognize the final notice of intent to levy because, first of all, we'll have those words on the notice. But up in the upper right-hand corner, or sometimes it'll be in the lower right-hand corner, you'll see what's called either a letter 1058 or an LT11. If neither one of those are present on that notice, guys, that is not a final notice of intent to levy, and the IRS does not have the right to garnish your wages or levy any accounts or seize any properties. Now, if you happen to have received that final notice of intent to levy, there are things that you can do to stop the levy or the garnishment in its tracks, but you have to act fast. Now, there are 3 bonus items that you can get from a transcript, but only really by working with a professional. So I'm going to call this number 6. I can tell, or any other professional can tell you by looking at the transcripts when a tax debt is going to be written off. So some people know and some people don't that the IRS, they only have 10 years to collect on a tax debt. And each tax year has its own expiration date. Once that tax year reaches its expiration date, the IRS is required by law to write off that entire balance. That includes the taxes, the penalties, and the interest. So you want to know what those expiration dates are. And a lot of times it's not clear on the transcripts, and the IRS, in most cases, they won't tell you. But a professional or someone like me, I can tell you almost the exact date. Number 7, a professional can look at the transcripts and determine whether or not you qualify for what's called first-time penalty abatement. It's a fancy way of saying a penalty waiver. So a lot of people just kind of try to wing it as far as determining whether or not they might qualify for an abatement. That's so unnecessary because I can look and within a matter of minutes, sometimes seconds, determine how much you qualify for, and I can determine if there are multiple years. Guys, this can, be thousands of dollars that you get to keep in your pocket. And number 8, the last one, is if you might be a candidate to get your taxes discharged through bankruptcy. Now, this is not for everybody, but in some cases, this can work. But there are very strict rules that you have to follow. All right? Now, if you want to learn more about transcripts and how they can help put you in the driver's seat when negotiating with the IRS, give me a call. You can reach me at 704-298-1040. And I'm Aiysha with Hayes Financial and Tax Relief.